Hello traders and welcome to another video review. Today is Tuesday, January 20th, 2024. Let's take a look at the Forex economic calendar for today. As you can see, I got only very important and medium important data on my calendar, and you can see it clearly that some data had been released overnight. Most likely Japanese jobs application ratio way below expectations of 1.28, and Australian retail sales deteriorate even further from 1.6% to minus 2.7%, which is worse than expected, minus 1%. Forecast. French GDP had 0% as expected. Now some good data from the Eurozone. KOF leading indicators from Switzerland beats the expectations of the 98.2 and the previous number of 98 with the 101.5. Spanish CPI increasing from 3.1 to 3.4%, and the same situation is with the GDP increasing from 0.4 to 0.6%. We are still waiting for the data of the German GDP, and this is the key event of today. This event is scheduled for at 10 o'clock. The market participants expect the GDP to deteriorate from minus 0.1 to minus 0.3. The same situation is expected with the Eurozone GDP, which will be scheduled for release 1 hour later at 11 o'clock. But in this situation, the forecast is 0% of the GDP. During the New York session, we have two very important data releases. One of them is JOLTs Job Openings. This data is scheduled for it at 4 o'clock. And the other one is consumer confidence, and this data is scheduled for this at 4 o'clock. At the end of the day, we got the API weekly crude oil stock data scheduled for this at 10:30. So, because of the data from the USA and because of the data from the Eurozone, there's plenty of the data from the Eurozone. Let's start with the main Forex pair, which is of course euro-dollar. Technical analysis of the euro-dollar at the 4-hour chart is showing us that this market keeps moving lower, but the momentum doesn't want to do any new lower low, so we have some kind of a bullish divergence between the market behavior and the price and the momentum behavior. So we got this bearish engulfing here, we got the bearish engulfing here as well, we got the second bearish engulfing here, so there is still visible bearish pressure. However, the pin bars here are telling us that the situation might be a little bit tricky for the bears, and the last hammer with the low at the level of 1.0797 might be the one that will change the outlook for the nearest future, because it looks like the market might be going a little bit higher these days. We are still trading. You can see it here. We are still trading above the key technical support, which is located at 1.0743, 1.0723. So there's a 20 pip zone here. Nevertheless, the market is still under the pressure. So we should most likely assume that this market will go lower, but maybe not on the pace that we are used to seen before. So right now, let me just move this one here and this one here, and there might be some sort of the ending diagonal pattern in progress, which means that any sort of the movement to the upside might be very dynamic, might be very aggressive, and of course the targets is on one of the horizontal levels here. Those levels are of course the technical resistance. So interesting situation developing here. Please keep an eye on the situation, because it looks like the market might be might almost complete this ending diagonal whatsoever. Now, crude oil keeps moving up. We just broke above the technical resistance located at 76.13. The local high was made at 79.25. And when we switch to the daily time frame chart, because this is much more clear on the daily, there you go. We just hit this level, and we need to move our key technical resistance at the level of 79.77. This is the high from the middle of the November 2023. So the breakout to the upside worked perfectly on a daily time frame chart. And please notice one more thing, that we are trading above the 150 periods moving average on a daily time frame chart. Nevertheless, as you can see, there's very interesting candlestick formation again on this around the area of the $80 basically per barrel. So typical bearish engulfing on a daily time frame chart, back into the this is 100 periods moving average. So far the market participants keeps bouncing from this level. Nevertheless, it doesn't actually looks that much strong anymore, and what we need today is the extension to the downside as the confirmation of this bearish engulfing. So right now this is what we got on the daily time frame chart. Let me just okay, so the triangle has been completed already. That might be the technical support somewhere here. So 76.61. Any breakout to the downside generally would expose lower levels with the 72.96, which is basically the this is 100 periods moving average. Nevertheless, the momentum is strong. The momentum is positive. There's still room to the upside, but we got some first warning from the market participants, from the bears particularly, that maybe the movement to the upside will not be that beautiful as we wanted to see. So please keep an eye on the situation on the crude oil. Let me just take a look at one more index, and this is the US dollar index, of course. Why? Because the US dollar index is about to break somewhere. It looks like it wants to break to the upside, but the US dollar index keeps trading below this technical resistance. It's been tested twice already. We are talking about 103.79, all right? And there is this 100 periods moving average on a daily time frame chart, 103.54, which is again very important dynamic technical resistance, right? So 1, 2, 3, 4, 5, 6, 7, 8 days in a row, almost 8 days in a row, the US dollar index has been struggling to break above 100 periods moving average and the technical resistance in order to test 104.23 level. So far, no avail. And the local technical support, let's say 103.007, still provides the support, which is cool, but this consolidation period looks like the market wants to pause this rally and go a little bit lower. There's visible bearish pressure on the US dollar index market, so we might see lower levels to be tested soon, which means euro dollar should continue higher. And the first level to be tested is, of course, the technical support, again 103.07, and the other one is 102.74. So please keep an eye on this progression here. If the US dollar index is going down, euro dollar is going up, what should go up as well? Maybe Bitcoin. On a 4-hour chart, we can clearly see that the market doesn't actually cares about most of the situation on the market. It just keeps moving higher. We got the bullish engulfing, we got another bullish breakout, we got another bullish engulfing. Just recently we've made a local high at 43,782. And if we take a look a little bit closer to this recent price action that we know, we should clearly see that this is a shooting star with a high at 43,782. So the next target to be tested is 42,854, and maybe then some kind of a target around the 42,000. Where is the 50 and 100 minutes moving average right now? Market conditions extremely overbought, but it didn't actually made any impression on bulls, and this movement to the upside is purely impulsive. This is wave 1, wave 2, 1, 2, 3, 4, 5, wave 3, wave 4, 1, 2, 3, 4, 5, wave 5. So it's a textbook example of a 5-wave impulsive. It's time for a correction. So it looks like we might be visiting $42,000 level very, very soon, as the corrective cycle will kicks in. That's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.